All right, we are live. So hello again, and welcome to another Red Cloud webinar. My name is Kobe Kushner. I'm part of the research team here at Red Cloud, and today we're going to be talking about mine tailings with EnviroGold Global. So with us today is Dr. Mark Thorpe. He's the CEO and director of EnviroGold, and he is joined by Senior VP, JC, and Zoya, CFO. So EnviroGold is focused on reprocessing mine tailings. For those who don't know, tailings are a byproduct of mining after the ore has been mined, brought to surface, crushed, milled, and processed. The economic material of interest is usually separated and concentrated before being shipped off-site. The remaining unrecovered mill feed is called mine tailings. And these tailings are then placed into either dedicated tailings impoundments, so ponds or dams, or, as was more common historically, dumped into natural bodies of water. This is an issue because tailings often contain environmentally harmful chemicals such as heavy metals, acid-generating sulfides, cyanide, radioactive material, etc., etc. Therefore, it can be environmentally disastrous if these tailings sites are improperly managed. However, because recoveries are never 100%, tailings can often contain higher concentrations of valuable metals, which may be economic to extract. And this is where EnviroGold comes in. They plan to tap into this opportunity by reprocessing mine tailings while reclaiming the tailings site in the process. So during today's webinar, the EnviroGold team is going to tell us how they're planning on doing this and provide us with an overview and an outlook. When they're done their presentation, we'll move on to the Q&A session. Just a reminder that you can type your questions into the comment box at any time. But as always, we do have to run through the fine print. So during this webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined on page 2 of the company's corporate deck, which we will see momentarily. And for Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on EnviroGold. And with that, I'll now turn it over to the team.
Thank you, Kobe. Great. Well, thank you very much, everybody, for joining. My name is Mark Thorpe. I've been in the ESG part of mining for the past 30 plus years, and I'm very excited to share EnviroGold Global's story with you today. Key for us is that we believe in the production of metals without mining. And that's our key mantra, that's our key process. We complement the traditional mining space by deploying relocatable modular equipment to quickly enter production and recover metals from mine tailings. I'm joined today by my CFO, Zoya Sheshkova, who has plenty of experience in the mining business, and also JC Giron. He's one of my senior vice presidents. And today we will be giving you the overall presentation. As Kobe mentioned, we do have forward-looking statements and safe harbor statements. We do refer to the JORC resource for the Hellyer project in this, and I would direct you to our press releases related to the Hellyer project and also to the Buchans project, which are on our webpage. The company itself, we're the solution to sustainable metals. If you look at the waste generation from the mining business, obviously not all of the metal is recovered. And in more historical sites, the processes were nowhere near as efficient as they are today. This provides an excellent opportunity for metal production without mining and eliminates a lot of the exploration risk. As you can see, we could probably just walk across the tailings storage facility and take the samples. It requires a lot less energy input. The material's already been mined, crushed, ground, and then finally placed in the tailings storage facility. So as you can imagine, the movement of this material to the processing plant is a lot cheaper than in a conventional mine. So I'll have a look a little bit just to give you a bit of an idea. Metal prices are up. This gives us an opportunity. Metal and gold, silver and copper prices are close to, if not at, all-time records, which makes a lot of the tailings storage facilities that were previously uneconomic economic in today's day and age. I'm joined in my endeavors by an amazing team led by our executive chairman, David Cam. David is an entrepreneur of many, many years experience, and he came up with the concept of using electrochemistry to recover metals from mine tailings. And he developed that with Brock Hill, our chief technology officer. As you can see from our group, we have a long and distinguished group of people. And JC, who's one of our younger fellas, often says that there's over 500 years of finance and mining experience in our team. So with that, I'll pass it over to JC, and away we go.
Thanks a lot, Mark. So as we've heard from Kobe and from Mark, tailings are the byproduct of mining and mineral processing and often contain significant quantities of valuable, precious, critical, and strategic metals. The global footprint of mine tailings is about 282 billion tons. There's about 12.7 billion tons of tailings generated every year. And as we've said, there's significant quantities of valuable, precious, critical, and strategic metals in those tailings. There's about $3.4 trillion worth of metals in global tailings. And we're targeting a market opportunity that exceeds 10 billion. That proceeds from our own internal assessment of over 300 tailing sites, and that number is always growing. So it's a massive opportunity. So a little bit about EnviroGold Global's business model, what we are doing to transform this opportunity into a profitable business. So it starts with analytics. We leverage an analytics-based approach to rapidly identify and qualify what we call major projects. And that is a definition that proceeds from, as I mentioned earlier, our examination of over 300 global tailing sites. And it essentially identifies what our sweet spot target project is. And you can see it there, and I'll talk about it in a moment, just there on the left. We have a profit share business model, and we find that that's a great way of accelerating our acquisitions of sites by creating a strong value proposition for site owners. We currently have 8 major projects in our pipeline, 1 under commercial contract, 1 where we've agreed to commercial terms via an MOU and are negotiating the definitive agreement, and then 6 more that are in various stages of commercial negotiation and investigation. Our target is to get 7 major projects into production by 2025, and based on our pipeline, I think we're actually well on track to achieving that objective. A little bit about the target project profile, sort of what we look for in a tailings reprocessing opportunity. About 6 million tons of tailings, about $124 per ton of gross revenue potential. Project life a little less than 10 years, and we target commercial metal production in less than 24 months. The longest lead time there being the permitting and environmental component. And Mark will talk about in a little bit just how we're differentiated in that space. EnviroGold Global versus conventional mining. Now, as Mark said, we complement conventional mining, and we do have some major differentiators that distinguish us from, I would argue, most, if not all, other metal producing companies. A typical mineral project is very high risk. It develops over 5 to 15 years, significant amount of investment, and only about 1 in 10,000 mineral projects become a mine. Our model is completely different. It's rapid analysis. You see there are estimated timelines in the lower left-hand side, 1 to 3 months, typical sort of qualification of a site using analytics, mine production records. Another 6 to 9 months we would target for process development, validation, some of the, advanced diligence on the site. And then, we would target metal production within 12 months. Again, the longest lead time there being that environmental component. And the end result for us is that our target IRRs, the IRRs we expect to get from our tailings projects, are substantially higher than industry averages. So key differentiators for our business model: lower risk, lower cost, and faster production. With that, I'll turn it over to Mark to talk about some of our major projects.
Thank you, JC. So as JC mentioned, we have several projects that are outlined here on the table in the lower center of the slide. We're looking at projects in West Africa, Central America, primarily Mexico, Eastern Canada, Northern Canada, and Australia. The interesting piece here is that the sampling and understanding of those projects is relatively swift. Most of the more recent mining projects have extremely good mill data, mill production data. They know what comes out of the back of the mill into the tailings pond because the metallurgical manager gets paid on that number. So oftentimes there are magnificent records over the last 10 or 15 years. Some of the more historical sites, a little more challenging, but we'll talk about that in a minute. So we can rapidly identify these sites, execute the commercial agreements, and get into production quickly with a low capex approach. Our first major project that we signed is the Buchans Delta Rehabilitation Project. This is out in Newfoundland and Labrador in Eastern Canada. It operated, actually, the mine that you can see in the picture on the right there operated from 1928 to 1984, producing about 16 million tons of ore with very, very high lead zinc grades, great copper grades, and obviously quite a bit of silver and gold. From about 1928 to about 1965, they just disposed of all the tailings into the Buchans River. The tailings flowed down the river into the lake at the bottom and formed the Buchans River Delta. And we have agreements for 1,225 hectares of claims that overlay the Buchans River Delta. We expect to be able to, subject to permitting, of course, implement our project, starting construction towards the end of this year and moving into production in 2023. Of more recent interest is the identification of an extension to the existing facilities. On the map on the left, you can see the area where the delta is located. And we just are proud to release this morning the discovery of the Western Arc. The central Buchans claims have historical tailings deposits that have been identified in this area here. We recently completed our geophysics and ground penetrating radar, and we identified these formerly unknown deposits that you can see on the left-hand side of the slide, on the western side of the delta. These are much closer to dry land, as you can see here, and very accessible in the Jeff Wall claim. We actually have full control over the Jeff Wall claim. Jeff Wall and EnviroGold have met an agreement. We have submitted an exploration permit for these tailings, and we're expecting to receive that and start our sampling in Q1 with a view to getting the laboratory results to define the resource early in Q2. It's a very exciting area, and because it's closer to shore, it's a little bit easier to access than the tailings in the central claim. The key here is the rehabilitation piece of the project. Those tailings, and as you can see, the metal concentrations would be fairly high, flowed down there, and they've been leaching. They're very, very heavy because they contain barite, and they've been leaching metals into the lake, and they've damaged the salmon habitat in the Buchans River and the delta. And it's our job to profitably recover those tailings and place them in a safe tailings storage site on land, which will allow us to restore the salmon habitat and also at the same time make some metal and some money for our stakeholders and shareholders. It's a very, very interesting project. Our second big project, and as JC mentioned, we have a signed term sheet for this, and we're in the process of negotiating the final term sheet, the final definitive agreement, is a massive tailings project in Tasmania, the Hellyer Tailings project. We've been able to develop a proprietary metal recovery solution for this. We were able to increase metal recoveries from 5% to 60% for gold, and from 30% to 90% for silver. In addition, our process has been, we've been able to improve lead, zinc, and copper recoveries. Our intention here is to install a 500 ton a day plant, our phase 1 plant, process at 500 tons a day, make any tweaks to the plant that we need to, and then install a full capacity of about 3,500 tons per day later in 2023. The outcome and the scale of the opportunity at Hellyer is magnificent. There's no other way to say it. You can see on the right-hand side of this of the screen there, the JORC resource, 600,000 ounces of gold, and if you add a 60% recovery figure to that, you can do the math. 90% of 22 million ounces of silver. That's a fairly good number as well. It's at a mine site. My team were there. Actually, my team were there yesterday in Australia time, identifying the location for the construction of the site, looking at the tie-ins for the services, power, water, etc. So we're very excited to join with Hellyer to improve their recoveries and improve the overall economics of the tailings there. It's a magnificent opportunity, and we're looking forward to getting that moving as soon as we have the signed definitive agreement, which we're expecting in the next short while. And with that, I'll hand it back over to JC.
Yeah, thanks a lot, Mark. So we've looked today at EnviroGold Global's business model. We've looked at some of the major projects that we have in our pipeline. Again, we do expect to be in commercial metal production in 2022. So why is all of this important to investors? Well, right now we're sitting at a market cap, mid 50 million or so US, 65, 70 million or so Canadian. We think that is a tremendous value for investors. We think we're significantly undervalued. We think the market's going to begin to realize that relatively soon. Best way to convey that would be by looking at some other competitors in the tailings reprocessing space. There's no one who's doing what we're doing. You look at a company like DRD Gold, highly geographically specific. They've achieved a market cap of basically $750 million by reprocessing one specific geographic opportunity. Amenable ores, high grade, it's a one-off opportunity. That's most of the players in the space. We are commercializing tailings reprocessing on a global level. We've got a phenomenal global pipeline. We expect to be able to get multiple projects in production in parallel. And so we think we're well positioned to compete, and we think that we're very, very well positioned as an attractive value opportunity for investors. Quick business summary here, and then I'll turn it over to Mark. So we did learn about our business model today. EnviroGold Global does produce metals without mining. We reduce the metal production energy requirements by up to 80%, significantly reducing the carbon footprint of metal production. We recover up to 98% of precious, critical, and strategic metals using advanced technology. We reduce the environmental footprint of legacy mining, delivering sustainable value to corporate, community, and environmental shareholders. We do have 8 projects right now in our pipeline, 1 under contract, 1 with commercial terms agreed, 6 more at various stages of evaluation and negotiation. And again, we do target commercial metal production for 2022. And we think our high free cash flow business model, our business model being designed to produce high free cash flow, can allow us potentially to consider an attractive dividend policy in the future. And again, we are targeting projects with an IRR that can significantly exceed the industry standard. So with that, I'll turn it back over to Mark.
Thanks, JC. I think I can summarize the opportunity best from my personal experience. I've spent 35 years wandering around the globe, working on mining projects in everywhere from the high plains in Chile in the desert to the jungles of West Africa and the jungles in Venezuela. And for 30 years, I've gone into the regulator's office and said, I want to build a mine. And they look at me thinking, oh my gosh, what have I got to do now? When I walk into the regulator's office with EnviroGold's story and say, we want to clean up the Buchans River Delta, or we want to improve metal production from an existing facility that's already permitted, the response is, how can we help you? And that's the difference. We get into production quickly and people want to help us succeed. And we think that we're onto a great opportunity with our proprietary technology. As I mentioned, we've been able to crack the complicated refractory tailings for profitable results. So with that, Kobe, I'll turn it back over to you and say thank you very much for everybody today for listening. And Zoya, JC, and myself are available to answer questions.
Awesome, great presentation, everyone. So yeah, as you suggested, we will now start with the Q&A portion of this webinar. And just a reminder to everyone on the line that you can type your questions into the chat box at any time. So let's start off with strategy here. You know, my understanding is that you don't actually own the tailings sites that you plan to reprocess. So why is that a big deal? You know, as you pointed out, some of your peers here aim to actually own the assets outright. So how does not owning the property itself fit into your overall strategy? And, you know, what are the benefits of not owning the property?
I think there are some benefits of not owning a car, as well as not owning the tailings. You don't have to do the maintenance, you don't have to do the work on it. But from the tailings perspective, what we do is we reach an agreement with the owners of the tailings to process the tailings, recover the metal. We then sell the metal or the concentrate, in whichever case it might be, and then we provide the tailings back to the owner in a safe and secure location. So for instance, at the Hellyer project, there's an existing tailings storage facility. There's an existing processing plant. We're like the catalytic converter. We go on the back of the processing plant. We take out the silver, the gold, some copper, lead, and zinc, and then we place the tailings back into the tailings storage facility, sharing the profits in the way we go. And so in the end, at the end of everything, it's a very simple model. It's just a little catalytic converter that bolts onto a plant, or in the case of the Buchans project, it's an environmental cleanup to the benefit of the owners, to the benefit of the province of Newfoundland, and the tailings are placed in a safe, secure tailings storage facility.
Great. And, you know, like, does not owning the asset help at all from maybe like an environmental liability perspective? Are you guys on the hook?
We're not on the hook for the environmental liability in the end. Obviously, we are concerned with the environmental liability, Kobe, because we're an environmental company, and we're a company that produces value, produces money, produces metal from a waste. Obviously, we would not get into a situation where we could not safely process the tailings and put the tailings into a safe storage facility. So we don't own the liability. We have also recognize that we have a duty of care, and we have a duty of care to make sure that the tailings owners are responsible in an appropriate way.
Right, great answer. So, you know, you mentioned these profit sharing agreements. You know, I was reading in today's press release, the agreement at Buchans is 50-50. Is there any additional upside? Like, considering you guys are bringing in your own modular plants and technologies, is there an additional management fee on top of that? And, you know,
So
how's that differ at Hellyer?
So for the Buchans project itself, there is a management fee in there. The way that the economics work is the 50% is on the net before taxes. We include all our operating costs. We include all of our management overheads, and there's a small management fee included in that. With the Hellyer project, it's a slightly different animal. We have a profit sharing, 50% up to 24 million a year, and then above 24 million a year in profits, we reap 65% of that benefit. And as you can see from the numbers that we presented, exceeding that 24 million a year is a key target for my team.
Right. So I guess circling back to Buchans and Hellyer, these were both VMS mines, right? VMS deposits. So I guess my question is, are you specifically targeting VMS deposits, or is that just a coincidence? And maybe tell us about that.
I can answer the question in as much as I think VMS deposits are targeting us. What we've found is that our investigation into Hellyer, and I'll use Hellyer as the prime example because we've been working with core research at core laboratories out of Brisbane, Australia. They're a magnificent partner in this particular piece. They invented the Albion process, for those of you who know the process itself. And we started working with core on the Hellyer project about a year and a half ago. And within a few months, my team had determined a leach process that allowed us to unpack the very complicated pyrite nature of the ore body. And you have to approach these things slightly differently. You approach them by understanding the way the matrix was formed originally, and then being able to unpack it one piece at a time. So once we actually had started and we showed the work on Hellyer, we've now tried it on 2 other VMS deposits, and it works. So we have our own, and it's proprietary. We've put a patent on it, and so we can move it forward to get going. And it really is a fantastic solution. The existing operations like Hellyer and like one of our tailings projects in Mexico, they continue operating. They keep making their money. They keep doing a great job at what they're doing. We just tack on our plant on the end, catalytic converter. We clean up the tailings, we make some money, and we put the tailings back in their tailings storage facility. So the secret sauce, if you like, is the way my team approaches it. We don't approach it in the conventional way in many cases. And by having this specific leach approach, we're able to liberate the gold and the silver.
So that ties in nicely with our next question. We have a few questions on what the technology is that's being used at each project. Is it proprietary? Will it be more successful in extracting the metals than the original extraction process?
So I'll answer the question in 2 ways, Kobe. One is we use a blend of conventional and proprietary technology. Obviously, I can't share the proprietary technology except to say that it's a leach process. For the Buchans project, for instance, we're planning on using a conventional flotation process. Why? Because the tailings were produced in 28, through to 1965. And the flotation processes back then were not that good. For Hellyer, it's a different piece. So I can't really say what our proprietary process is, but it really does work well on these refractory tailings. And so we've actually had people saying to us now, we heard about you, can you take a look at our tailings? And people are bringing us different opportunities. So it's a little unusual for me because I've been used to having to go out and seek opportunities. And with our particular business model, people are knocking on our door to come in and say, hey, can you please have a look at this? Can you please have a look at that? That then leads us on to the commercial discussions. And the commercial discussions depend very much upon the type of deposit is, the scale, and the scale of our investment. Currently, as we said, we're a low capex. We're looking at most of the investments would be in the size of project that we're looking at, 80 to 100 million maybe to get us going somewhere in there. But very, very fast to market, because we build these smaller plants first to de-risk the project, de-risk the capital. And then once we have tweaked everything, and I don't know if anybody's ever been on a brand new mine site, but I've been on a lot of new mine sites within a lot of plants. And within a week, the metallurgical manager has got black plastic pipe hanging all over the place, and to try and tweak this and adjust that and do the other. What we intend to do is we intend to look at any of that black plastic pipe that we've got and incorporate it into the bigger plants as we build them out. So it's a great model. It's not go big or go home. It's get it right and then make some money.
Gotcha. So you mentioned that you are planning on proprietary technology at Hellyer. You know, is this patented?
Yes, we have a patent pending on this technology. It was filed about 8 months ago. So that patent is pending. We're finalizing, obviously. When you submit a patent, you have various things to complete, and we're just finalizing that work. But yes, it is patented, and we will just go forward. And it's amazing, because when my team looked first at Hellyer, they said, "Oh, this should be applicable to a few other tailings storage facilities around the world." And we've just started on one in Mexico, investigating it in Mexico, and it looks to be reacting quite well. So everything that we learn about Hellyer will be applicable to the next one. Very interesting.
Great. And let's talk jurisdiction here. You know, both Buchans and Hellyer are located in Tier 1 jurisdictions, Canada and Australia, respectively. Is that a coincidence, or was that a strategic decision to target those?
We're kind of agnostic to, not totally agnostic to jurisdiction. It just, this one is a coincidence. We happen to be working there, as you'll note, that several of the other projects, the one in West Africa is in Ghana. I worked in Ghana for about 12 years, so I know the jurisdiction very well. The other projects are in Mexico. About a quarter of my team are fluent in Spanish, and a lot of my team have worked in South and Central America. So we're targeting areas where we feel comfortable and we know the jurisdictions well. This allows us to build out. And when somebody says, can we work in Peru? Why not? Some of us have worked in Peru before. So just happens to be coincidence that we happen to be in Australia and Canada for the first ones. Probably won't be in a Tier 1 jurisdiction for the third one.
Great. And so this morning you guys put out a press release on Buchans. So let's just dive into that a bit.
Sure.
You know, looking into the press release, you guys say you have full control over the Jeff Wall claims. But you also mentioned that you have some plans for some other claims to the north. So maybe what's the deal there? Is that a hint as to what's to come? Are you looking to expand your footprint there maybe?
We've essentially, with the claims that we've got, we think we've covered about 90% of the potential tailings in the Buchans River Delta. The beauty of the Jeff Wall claims is that there's clear ownership over the tailings. There's historical data for the central claims that have shown from ASARCO studies and previous studies that have shown 2 million tons of tailings in those central claims. We're expecting to be able to double that with our exploration work that we're doing in the Jeff Wall claim. And as I mentioned, the Jeff Wall claim is beautiful. It's tucked away to the side. It's close to the shore. You can literally walk out most of the year into the claim and you can do it. And dredging's easy. I worked on a dredging project, specifically on a tailings reclamation project in Ghana, and we were reclaiming tailings, not from a delta in this case, but we were reclaiming tailings from an old tailings storage facility. Our total cost to get the tailings about 8 years ago, total cost at that particular site in Ghana, it cost us less than $75 a ton to get it into the plant. So it's really economic. With the modern way that dredges are operated, it's 3-dimensionally controlled. So it makes for a fairly simple recovery, and it's a great way to pick up and move tailings. It sure as hell beats digging holes underground and blasting everything apart, but that's not our model. We complement that model, and we thank them for providing us with the resource that we need.
Great. And so you guys are planning to, drill some very, very shallow core holes into this and put out a resource in Q2. Is that correct?
That's correct, yes.
And, any kind of idea what you think that resource is looking like?
We just identified it, Kobe. This is brand new. Nobody's ever found this before. It's a completely new. It's like finding an extension on an ore body in a traditional mine. Somebody drills one hole off to one side, or they do an aeromag survey and they find this massive extension in a conventional mine. That's what we've just done at Buchans. So I wouldn't like to put conjecture on there. I'm optimistic that we can double the resource, but the drilling will tell. And the nice thing about our drilling, deepest hole is probably 5 meters, and it'll probably take us 6 to 8 weeks to complete all the drilling. So it's a great model.
Yeah, that was actually my next question here. What would the cost be to drill this thing off? And given that it is tailings, it's a lot softer than rock. You're not really drilling blind either. You can see it. So I imagine it's not going to cost a lot to delineate a resource here.
We just bid the work, so I'm just waiting on the actual bids. But if we spend $200,000, I'll be surprised in total. So
right.
I mean, when JC said, and he looked at our, you look at our timeline to production, it really is like it's fast, because you can not quite in this case walk across it, but you can put a barge over the top, do the vibratory coring, and be done. You can do 2 or 3 holes a day at least to move these forward. So it's really good. And it's interesting because it's we would then be able to obviously parlay that resource into some project financing and go from there. So it's quite good.
Great. And we have a question here. So are your proprietary solutions portable to existing mining practices so that the original extraction recovery is higher?
I would say yes. It's absolutely available as a bolt-on to your plant, or it could be incorporated directly into the plant with a little bit of weaseling. If you think about some of these VMS projects, if it's a conventional flotation, which many of them are, they become sub-economic fairly quickly towards the end of the mine life. However, by adding in the extra metal recovery, then you open up a whole new section of either you've got money to strip, you've got money to go deeper, you've got money to go wherever. So I think we do 2 things particularly well. One is we complement the existing mining space. And then if you really think about it, because of the change in metal prices, a lot of people are looking at redeveloping older mines. So there's 2 ways we can help as a business. You put your thinking hat on a little. An older mine usually has a tailings storage facility. Well, we can work with the owner of that older mine to see if there's valuable metal that could be recovered out of that tailings storage facility, pay the owner's share to the exploration company, the exploration company then has a cash source. It's not going cap in hand to investors. We can help pay for the exploration. Not only that, but because we have different economics on the ore that would be coming out of the underground or out of the open pit, then we would have a benefit overall to the economics of the project. So you can find my phone number on the webpage.
Yeah, for sure. And look, I feel like you might be underplaying this a bit, but recovery is huge, right? When you're delineating any underground resource and putting it into a reserve, it can be the difference between having an economic deposit and a sub-economic deposit. So it can be huge.
Yeah, I actually received a phone call from a colleague of mine a couple of 3 months ago, and he said, Mark, I'm building a mine. I haven't even got it up and running yet. Can your team have a look at our tailings? So there's where the opportunity starts to snowball for a company like ours.
So we have some questions on, how much is it going to cost to dredge the river delta, and with that, maybe just if you can throw out some OpEx costs for what you guys are thinking for Hellyer as well as Buchans.
So dredging is a relatively economic way to move material. When I worked in Venezuela, I was working in Las Cristinas, which is down in the southern part in the jungle, and the garimperos, which are the illegal or unauthorized miners that work down on the deposit, they used a sluicing way to move the material up to their carpet that they had. So in this particular case, we're expecting sub $2 a ton to be able to mobilize the material. With the Hellyer project, we have zero cost to it because it comes straight out of the plant. So we're literally take a bleed off the existing tailings facility, direct it into our plant, clean up the material, and put it into the tailings storage facility. So it's a very low cost. I mean, it's not zero, obviously, because there are some operative costs, but it's essentially negligible when you can look at the processing costs. Processing costs on Buchans, conventional 4-stage flotation. So that's those numbers are available around all around the globe. That's a fairly simple approach. You literally, for Buchans, we're planning to dredge the material, thicken it on shore, pump it up to our processing site, run it through the flotation plant, and then place the tailings in an existing tailings storage facility. So again, economics on those are readily available. For the Hellyer project, because it's a newer process, what we look at is the net revenues, and we're going to be substantially under the value of the material that we're moving to the plant with the recoveries that we're getting. So I can't really say on the Hellyer project what the economics are looking at. I apologize for that. But with a relatively small upfront capex, the economics look particularly good.
So, speaking of project economics, which is something I think most of our viewers here want to see, are you guys going to be putting out a PEA or a scoping study for your Buchans or Hellyer projects in the near term?
Yes, we're planning on putting together a resource definition for the Western Arc. We've had a QP design our sampling program. We'll be using recognized laboratories to do the testing. So when we declare that inferred resource, we're expecting that in Q2 this year. For the Buchans project, we've got ongoing laboratory testing at core to prove up the process, and we'll be putting together a scoping report on that. I'm not sure whether that'll get out to the market because we've already got people lined up and wanting to finance the project. So it's quite an exciting project. So it's one of those ones. We're not a conventional approach, Kobe. We're a different type of company. We're an ESG company, and we're not trying to build $1 billion project. We're trying to build a 500-ton plant, tweak that plant, and then build the real recovery plant at that point. So very exciting.
Yeah, for sure. It makes sense with if the financial risk is a lot lower, maybe you don't need a 43101 economic study for it.
Yeah, it's not a conventional mining project. It's no, we're looking at projects here that reduce the environmental liability of the tailings because we either remove the heavy metals, or we allow the precipitation. In the case of the Hellyer project, we allow the precipitation of arsenic into a stable form. We're reducing the amount of pyrite in the tailings, so that in itself is reducing the liability for the actual owners. They're getting a tailing that's less likely to generate acidic drainage. So not only is it beneficial for us, but it's beneficial for the owners of the tailings. And in the case of Buchans, obviously, for the salmon.
And just for clarity here, the scoping study is planned for Hellyer, right?
Yes.
And after that, you guys are hoping to do project financing or maybe concurrently, and then get into production when?
Target is the Q4 2022. Just got to get the agreement signed, and we're already doing the work. We're already advancing along the kind of the project pipeline that we've got laid, the project development program, that we have laid out. The work's ongoing at core even as we speak. So, and it's really exciting. It's really fun.
Yeah, for sure. I mean, I'm having a hard time thinking of any other companies sub $100 million market cap that's actually claiming to be targeting production this year within the next year. So, that could be huge.
I think it's an opportunity, and I think the benefit here is having very good partners, and we did put out an expression of interest in partnering with us, and we got several, shall we say, very reputable companies in the EPCM space who want to partner with us right from the get-go. And so we'll be actually involving them sooner than the traditional mining model. We can't do it any other way. We have to get them in early. They're risk sharing with us, and it's a completely different paradigm, and that's been used many, many times. But in this particular case, I believe EnviroGold Global is a different type of metal production company.
I mean, that would be a great place to end this, but there's still so many questions, so I'll just quickly run through them. So, we have a question. Someone wants to know who your current shareholders are, and what are your cash needs for this year, and how much cash do you currently have? So
we're a young company. Most of our shareholders are quite a few of our shareholders are insiders, and they've entered escrow agreements, so the shares are kind of locked up. We're a new company. We've got to obviously finance the Hellyer project, so we'll be looking for specific project financing for that, and we've got to finance the Buchans project, so we'll be looking for project financing for that. And as a new company, we're always looking at financing opportunities, and I'll just leave it at that. I think project financing is our key target here. And once we get that in and we get those projects up and running, I think it'll all come out in the wash.
So how much money has gone into actually developing your proprietary tech?
$250,000.
And back to the shareholders, how much does management own?
Management and directors own about 50%, JC, is it? Somewhere in there?
That's correct.
Yeah, about 50%.
All right, so there's definitely skin in the game.
Yes, definitely.
Great, and can you maybe hint at some of your operating partners for any of the other six projects under negotiation?
I'll say this: they range from mid to large cap Canadians to mom and pop operations in Mexico. It's the whole gamut. We're targeting some of the opportunities are 2 million tons. Some of the opportunities are 70 million tons. And it all depends upon the operator and what they want, the owner and what they want. We're having to prioritize, obviously, the most profitable ones, which is a nice place to be in.
Yeah, for sure. And, speaking of, projects coming online soon and project financing, can you maybe tell us or hint about what kind of CapEx requirements you guys are looking at?
Zoya, do you want to take that one?
Sure, absolutely. So as Mark said, a typical project would require less than $100 million in order to get it going to not only through to the commercial production stage, but actually into the commercial production. And so for both Buchans and Hellyer, the CapEx requirements are below $100 million.
Great. Is there any final words here now that we're coming up on time? Any last reasons we should be paying attention to your story that you feel you didn't really get to articulate?
I think what I'd like to do, Kobe, is wrap it up. JC and Zoya and the team are what makes this company. We're pulled together. We're already a global company. Even we've got people around the world. Zoya's in Toronto, JC's in Reno. So we're a global company with a dedicated group of individuals. But more than that, we're producing the critical, strategic, and precious metals without mining. And how does that fit into today's economy and today's global concepts? Many people don't like ESG. I happen to love ESG. That's what I've worked for 35 years. And it's an opportunity now. I've got an opportunity to lead a company made of great people with a great product that's going to contribute to the transition to a low carbon economy. So the concept is we're relatively young. We listed in July of last year. We've already got 2 projects ready to rock and roll. For a mining company, that's phenomenal. Even for an ESG company, that's really, really good. So my thoughts are great team, great projects, great opportunity.
Great value.
There you go. Thank you, Jason. Even better.
Yeah, I don't think there's anywhere better to end it than right there. So Mark, JC, Zoya, thank you guys so much for joining us today. It has been a pleasure hosting you.
Thank you so much, Kobe. And thanks to everybody on the line.
Yeah, thanks everyone for all your questions. And to our viewers, if you want to learn our thoughts on EnviroGold, as well as other companies that we watch, we do publish all of our research on our website. It's totally free of charge. And just a reminder that our next webinar will take place Thursday at 1 p.m. Eastern, 10 a.m. Pacific. Our very own Taylor Combaluzier will be sitting down with Cordoba Minerals. Again, that's Thursday, January 20th at 1 p.m. Eastern, 10 a.m. Pacific. Thanks, everyone, for tuning in, and have a great day.
Thank you.
Thank you, everybody. Bye.
Thanks, everyone.